Getting into Realty Income Corporation, stock ticker symbol O. Again, it's in real estate. It's a REIT, headquarters San Diego, California. The current monthly dividend yield is 5.68%. The PE ratio is at 40 times its earnings. A little high right now, but that's okay. Not every stock is going to be considered undervalued by their PE ratio. You're going to have to mold your perceptions in all unique ways. I really like this stock, and if it keeps going down lower, I'm gonna keep adding to the position. And in regards to some of the gematria we have O, real estate assets or quality equals 333 English ordinal and 396 in reverse ordinal. O, stock monthly paying dividend, also has 333 English ordinal with 396 reverse ordinal. So you see the connection here. O, real estate assets or quality. O, stock monthly paying dividend. You see that connection, right? We also have O, stock experiencing struggles even with an inverse real estate portfolio in 2023. That equals 330 in English reduction. We also have Realty Income Corporation stock equals 137 English reduction, which is the 33rd prime. So it has some really good gematria, all right? And understand, when the price is lower in the stock market, if you believe in the company, those are just discounts. Everyone, gets scared. Everyone thinks, the world's going to end. But if you know what you're buying, the discount is beneficial for when it goes back up. And at one point it was trending at over $80. So if you believe in a company long term and it's sitting at 50 right now, that could be a $30 per share increase when the market turns around for real estate. And again, they're getting the residue what's happening in residential real estate, not commercial or not even office, right? These are different standalone lease based things. It's not office space, not residential, and stuff like that. So this is like a different, unique blend, and I like it myself. Now, some more of the financials. Let's look real quick. The assets on hand that has 53.98 billion. The total liability is 22.67 billion. So the net equity is at 31.31 billion. The shares outstanding is 708.8 million. So I calculate the net equity fair value at 44.17. Now I'm not saying it's going to get to $44, but that's what the assets minus liability they have on hand for their fair value. So the closer they get to their fair value, the more closer of a discount I believe it is. So I really like this company, right? And here from the filings, I just have the percentage of the total portfolio of the things that they're in. So, obviously they would, when you think of, you think of 7-Elevens. So the convenience stores, right? From their last 10Q, we have June 30th, 2023, convenience stores, 11.1% of their portfolio. Grocery, 9.9%. Dollar stores, 7.1%. Home improvement, drugstores. So you see what their portfolio bases off of, right? But the top three that I really like to focus on: convenience stores, grocery, dollar stores. And so then when you go into client diversification and via their number of leases, you start getting into Dollar General, Walgreens, Dollar Tree, Family Dollar, 7-Eleven, FedEx, LA Fitness. So in other grocery stores like Tesco, Walmart. So this is their diversification. And a lot of these stores, even though in the down times they might not do too well, but a lot of these stores are well-run companies that they'll still pay their lease. All right, and that's what important. We have clients that continue to pay their lease. Now, in my opinion, the one the one client that I'm a little worried about right now is the Dollar Generals and the dollar stores in general, because they're losing a lot of money. A lot of people, those are in low income areas, and there's a lot of theft. and their margins are already low because they're selling low price products. So if there's theft still going on and they can't recoup that, that's going to be an issue. So hopefully, this can turn around, and I think that is going into the decrease of the stock price right now. But when there's blood in the water, you have to stand on what you believe in, and I think, regardless if all the dollar stores go down in flames due to theft, we still have the Walgreens of the world, we still have the 7-Elevens, the Lifetime Fitnesses, the CVSs, the Lowe's, and whatnot to counteract that situation, and that's why they're diversified, and I think they're diversified in a really good way. For some gematria, we have dollar stores will affect O greatly, 137 English reduction. O is inverse REIT portfolio, 137 English reduction, 331 reverse ordinal. Retail, grocery, and convenience stores still pay rent during economic hardship, 333 English reduction. That's important. That's a big one. O is not exposed to office space, 303 in English ordinals, 33 because 0 is a value placeholder. So, that's my analyst on O, Realty Income Group, incorporate Realty Income Group. Just hold the line on it. It's a long-term play, a nice hefty dividend, and if it keeps going down in price, the dividend gets even more better. So that's what I believe.